Hi, Dusty. How are you doing?
Living the dream. Any day above ground is a good day.
Wonderful. We're here in San Juan Capistrano, California. Dusty, tell me about what you do and what you like doing here at your mortgage company.
Yeah, that's a great question. So, we're in charge of the process from when somebody looks at a house and gets them financing so that they can close on the house and walking through all the nuance. Sometimes people are first time home buyers and it's super complicated and they got to digest a lot of information. Sometimes we do refinances, which is more simple, and we do complex loans like construction loans, renovation loans, some of the products that people don't really want to do in the mortgage business because it's complicated.
Dusty, most people think a mortgage lender's job is to just find the lowest rate. How would you describe what you actually do for your clients?
Yeah. So people think you just find the cheapest contractor in order to build a deck. But when the deck starts falling apart in a year, then it's not such a good deal. In the mortgage business, it's the same thing. I can do loans cheap as anybody else. But the complicated part is walking through all the details up front, getting people pre-qualified if they're buying a house, or making sure if we get into a transaction on a refinance that we've gone through the whole process of looking at your documentation, understanding your business, understanding how we're going to document your income if you own a business. Like those things are complicated. And having the experience of 25 years in the business, that helps versus somebody in a call center in Detroit who's just learning how loans work.
Wow, it sounds like you deal with multiple situations and multitasking all areas here.
Yeah.
If someone called you today and said, just get me the lowest rate, what would your response be?
Yeah. I'd go through and I'd talk to them about what the lowest rate looks like for their situation. Like, what are they doing? Are they buying a house, refinancing? We get deeper into some questions and then we figure out what the lowest rate means for them. I used to work at a retail shop and we were not the cheapest. And now I work for a broker shop and we're very reasonably priced. I can compete with just about anybody. So I'll just work with them and figure out what the cheapest price is. And if they have a quote from somebody else, call center in Detroit or something like that, we'll go back through and figure out if that's reasonable and I can just match it or beat it. Usually I can.
Wonderful. After doing hundreds of these transactions, what's the one thing most people don't understand about what a mortgage can do for their life beyond just buying a house?
Yeah, that's a good question because years ago there was this company called Ditech, and their whole advertising campaign was "We're cheap," and so that got everybody thinking like my job as a consumer is to figure out what is the best deal on a loan. Really, what it is about creating long-term wealth. So you buy a house, and maybe your rent is $2,500 a month. You're getting a mortgage for $3,500 a month, and that sounds scary. Doesn't sound like a great idea. But if you bought that house for $400,000 in 2013, it's probably worth $900,000, $1 million in Orange County now. That's a huge amount of wealth. And so people are concerned about how do I shave $50 off of my transaction when they should be thinking in 5 years from now, what will my nest egg look like for my family? When I go to retire, what will my home expense be? Because that $35,000 mortgage payment in 2013 is probably $1,500 now that we've refinanced it, we've paid it down, we've got ourselves in a better financial situation.
Right. That's a great way to look at long-term vision.
Yeah.
Promise Home Loans talks about transparency and being a mortgage expert. What does that actually look like in practice when you sit down with someone who's never bought a home?
Yeah, that's a great thing. So when you walk into your bank or you walk to a big retail lender, there's a number of them around here. I say you can throw a dart up in the air and hit a mortgage or real estate person in Orange County. But we're a broker, so we have to fully disclose everything that goes into a transaction and justify our value for what we do. And I've got 30 different lenders that we can shop for the best price, for the best service. If it's a purchase that needs to close in 13 days, like I have a lender that can do that. They may not be the cheapest lender, but they'll get us to the finish line and everybody happy. And if we need the cheapest price, but we've got more time, we can find that solution. And I always say there's fast, easy, and free or cheap, and you get to pick two out of the three. So we'll help you figure out that solution.
Wonderful. Dusty, you mentioned in the past that you will do loans that other people don't want.
Yeah.
Why is it that you're willing to do these types of loans?
Yeah, that's a great question because they're complicated.
Right.
And a good example is a construction loan. Like that is not, let's just figure out the rate and we're good.
Right.
I have to coach you and the builder on what requirements are needed for us to start the loan, what documentation we need, like permits pulled on certain transactions or just building specs. I need the bid to be in a certain format. I need to walk you through those expectations and those milestones. And if I do that wrong, everybody's going to be super mad. And a lot of loan officers don't want to have people mad at them.
Right.
They just want to cut checks.
Yeah,
and
yeah.
I want to understand the process, bring that to you, bring that to everybody involved, and have them through the process be like, I was expecting this. It's going to be an extra 15 days because we got to get everything dialed in before we can order an appraisal on a renovation loan or a construction loan. And if I don't set that expectation, you're going to be confused, you're going to be mad. And customer service is more about setting those expectations and delivering than setting unrealistic expectations and everybody being frustrated that we don't hit them.
Yeah, no, that's awesome, Dusty. It sounds like you truly guide your clients through the process and not just make it another transaction.
Yeah. And that's the difference between being a trusted advisor
right.
versus being a transactional person that puts you in a database and calls you in 6 years.
Awesome.
Yeah.
You helped Grace, an immigrant from Brazil, buy her first condo in 2013. And today, she's built a 7-figure equity position across multiple properties. Walk us through how that journey unfolded.
Yeah. So her realtor that I've worked with for 15 years, she brought Grace to us and she wanted to buy the cheapest condominium in Orange County. I think it was about $200,000 at the time. It's worth $500,000 or $600,000 now. And she was diligent. She took her extra income from her self-employed business and paid that mortgage down.
Oh, wow.
She ended up getting married. He brought some property too. And they have since paid most of it down. And just recently, we leveraged taking money out of those properties that they own free and clear to go buy fourplexes in Arizona. So they've created somewhere in the order of, I want to say about $1.5 million worth of equity.
Oh, wow.
Just being diligent at paying things down, living within their means. And compare that to a lot of non-immigrants who buy the Lambo, live with their parents, and after 20 years, they've got nothing to show for it. This is the person who is bringing that diligence and hard work. She's a masseuse. She works really hard to bring that American dream to life.
Yeah, that's a great story. I love that. It sounds like you help people with wealth building as well.
And most people don't think about that. They think I'm going to go buy a house and what does that mean? Well, that means in 30 years, you have no housing expense. That means you've set the ceiling on their housing expense. And every time rates go down, we get to refinance it and get them a better position.
Right. Dusty, do you think that's just more of an educational process? Because like what you just said, like the average homeowner doesn't understand all these wealth building options and techniques.
Yeah. And that's a big thing. Like a lot of people grow up renting with their parents. And as they're going through their journey and they go from their entry-level job to a higher paid job, nobody talks to them about like, what are you going to have after you're done with that?
What do you have to show for?
$60,000 a year, $100,000 a year job. Like when that income goes away, what do you have left?
Right. Yeah, that's critical right there. A lot of immigrants or first generation Americans don't think home ownership is accessible to them.
Yeah.
What would you say to someone who believes the system isn't built for them?
That's a great question. I mean, we have the news and all that's going on with being a little less friendly to the immigrant community. And I think that's a shame because they're the ones in the trenches doing the hard work and they want to be a part of the community. And the best way to do that is to own a home. And it's open to everybody. I deal with a lot of people who are on HB1 visas that are tech workers. I deal with people we've got one in the Southeast. He came from Nigeria. He got his master's, got his doctorate. He's a teacher, and he went from a student visa to CO3C visa, and now he can buy a home.
Oh,
and that's the person we want in the community. He's working hard. He's teaching our kids.
He's contributing, right?
And as a member of the community, he'll stay here. He'll work hard. He'll teach his kids about building wealth through equity as he experiences it.
That's incredible. Great story. Richard wanted to buy a fixer in Orange where the kitchen and bathrooms were completely inoperable. Most lenders would have walked away. What's renovation financing, and how did you use it to turn that into over 500,000 in equity for a teacher?
Yeah. So that's a good story. Richard would not have been able to save $500,000 living hand to mouth as a teacher.
Right.
And that was a Freddie Mac sale. The person who owned it had a loan with Freddie Mac, and they took the house back, and the house had been destroyed by the current owner, and it wasn't financeable. There was too many problems with it. So what we did is we got a 2 or 3K consultant out to the house that put together a work project that would need to get it up to snuff for financing. Then we got a contractor to bid it out, and we did the work after they closed on the house. And most of the time that home goes to a flipper. They buy it, they put a little lipstick on it, and then they resell it to somebody overpriced. In his example, I think after we were all was said and done, he had $150,000 worth of equity after 6 months when the project was done. And that's because the house was uninhabitable. And when it was done, it was beautiful. And there was concrete work. There was all kinds of stuff that needed to be done to that house. And I've since refinanced him a number of times and saved him a bundle of money on his monthly. It's cheaper for him to live there than it would be to rent. And he's created that equity. It's almost like we paid him to move into that house.
Yeah. I mean, it sounds like you do so much more than just mortgage lending. You're a trusted advisor. You're doing this consultation with your clients to kind of help them navigate what choices to make that's going to further and benefit them in their lives.
Well, because like I deal with people who are going through divorce
Right.
After death, that they need to split up the property. Like you get real squishy with people and give them a big bear hug over the phone or on Zoom. You get to feel that way with every client that comes in because they need to talk through their issues and they need to understand what the value is. It's not what we show on Instagram or TV.
Right.
The influencers are all about how to scam the system. And really it's about creating that long-term value for a client.
Yeah. And it also sounds like, Dusty, you're much more personable and you offer service with empathy, like with, people that are going through divorce or, one of your clients, I guess, had brain tumor, which we will talk about later.
Yeah.
And I find that very commendable. That's awesome. Thank you, Dusty,
Cheers.
because not many people can operate with that kind of human compassion while they're doing business. And I think people that are in delicate situations like that will appreciate you so much more. So we thank you, and I thank you for them.
Cheers.
Fernando had $1 million in cash to put down, but his business income didn't look good on paper.
Yeah.
How do bank statement loans work, and why do traditional lenders miss clients like him?
Yeah. So if you walk into a Chase Manhattan bank and ask for a mortgage, they're going to want to see 2 years tax returns. They're really going to want to see that established business. So Fernando, he had a staffing business and he was making good money, but COVID put him into a whole nother echelon of income. And it would take 2 years for those tax returns to show the income that he's making. And as his business grew and he had a whole bunch of excess cash, we were able to use those bank deposits. And most lenders will take whatever your revenue is, whatever you're depositing in your business accounts, they'll take 50% of that and give you income for that. Some people will even do a lower expense ratio if you're like a single person attorney or you run a marketing business and it's just you, they'll do an even lower expense load. So fire your landlord, build your home office.
Right.
Yeah.
Well, yeah.
Yeah.
Brian had rented the same home in Compton for 20 years and watched 3 different owners get foreclosed on it. When the listing agent gave him a chance to buy, the property had a non-permitted addition. How did you get that deal done?
That's a good one. So Brian didn't think he could ever buy. Mm-hmm. He grew up in a family where nobody thought about owning real estate. And so he was constantly tenant, and he had these deadbeat landlords that bought the property in kind of a funky neighborhood.
Right.
But he was the king of the neighborhood. I drove up and said, I'm going to meet Brian. And they were like, do you want a water?
Oh, wow.
Can I take care of you? Because we needed to sign loan documents in Compton. So we sat down, we went through it with the tenant and the other unit and doing the renovations to convert that illegal garage conversion back to a garage. He was going to be paying less than he was paying in rent.
Oh, incredible.
And we did that during the downturn when it was an REO so that he was even further ahead. He had $100,000 in equity 6 months later after everything was said and done with the property improvements.
Incredible. Angela's first home had major issues that scared off conventional lenders. What does it mean to use renovation financing as a purchase tool and not just a remodel tool?
Yeah, no, that's a good one. So in that house, if I go back to it, the contractor had been cutting corners. And so there were leaks from the roof, from the deck, all this stuff, and there were structural damage to the house. So we had to get a bid for repairing all that work, getting the pool that was leaking up to code, get that all done after the close of escrow. So she was able to buy this house out in the Inland Empire that was unfinanceable. It had structural issues, get everything fixed, and she could move in, everything completely done. And at the same time, she had them paint, do some flooring changes, some cosmetic things, but that house wasn't financeable. You would have to get somebody in there that would pay all cash for it and then flip it and sell it to somebody overinflated. And she was able to use renovation financing to do the work after closing. It was really a tool to help them get into a home that they wouldn't have been able to afford otherwise.
Wonderful. You helped Jessica buy in Lincoln Heights for $330,000 in 2015, an area people thought was too rough, and then used a line of credit years later for her to buy a rental in Tennessee.
Yeah.
How do you think about a client's first home as a launch pad and not a finish line?
That's a good question because it comes up a lot. People are like, I want to buy that final home that I'm going to live in forever. And
right.
That's a lofty goal. Buying a house that's around here, a nice house is $1.5 million to $2 million.
Right.
How do you do that? Well, usually what people do is they buy a home that will get them out of being in the renter class, put them in the owner class. And as that equity builds and those mortgage payments come down as we refinance, it opens doors. So for them, they bought what's a Sears and Roebuck home that was shipped out and assembled on site. Very small. I want to say it was like 700 square feet.
Oh, wow. Really?
In a really funky neighborhood that got gentrified. And it's nice there now. Maybe there's some homeless people down the street, but I think they have $200,000 or $300,000 worth of equity, and they bought a rental in Tennessee using a line of credit to tap into that equity to go buy a place cash in Tennessee for, I want to say it was 70 or 80,000. It's probably worth 150, 200,000 now. I mean, you just think about those numbers with their jobs, they wouldn't be able to save that kind of money.
Correct. Absolutely. And that makes total sense what you did to help maneuver the funds over to another property.
Yeah.
Home ownership is often compared to investing in the stock market. For someone like Brian, a machine shop employee who couldn't have saved $400,000 on his salary, how do you explain the math of building wealth through real estate?
Yeah. So if you look in Southern California over the last 50 years, there have been two downturns. Everybody's focused that we saw real estate prices go down in 2008. We also saw them go down in 1992. And those were really credit challenges. Other than that, real estate has gone up forever in Southern California. There's a shortage of real estate. It's hard to build. So if you buy something, you're both paying down your mortgage, watching the property appreciate. So there's value created there. I had another friend who bought in San Clemente for $2.5 million. He sold 5 years later for $4 million.
Oh, wow.
It's almost like the real estate market paid him to live there. For Brian, he could have saved money and put it in the stock market, which is volatile.
Yeah.
Or he could put it in real estate, replaces rent. It grows as time goes on. And it's one of the safer things and a hedge against inflation. As we've seen rents get crazy around here, everybody with those low 2-3% mortgages have not seen their real estate payment, their mortgage payment change.
Dusty, thank you so much for your time. I learned a lot today and I appreciate all your insights, and we will see you in the next series.
Cheers.